Hi everyone, it's Jefford again from Rubik's Academy. Today we are doing a special episode because we are in a very special time of the year. No, I don't mean COVID-19. For Singaporeans, it's time to report your income tax. So I'm going to just do a very special episode for those of you who hold digital tokens. But just a disclaimer here, I'm just sharing what I think is important. I'm not an expert. But I just wanted to highlight some points within the document which I think are more salient to those of you who do hold digital tokens. Okay, or well, that's what IRAS calls it, right? But to guys like us, we sometimes use the term cryptocurrencies. Okay, it's the same thing. It's the same thing. All right. So without further ado, let's go inside the topic for today. All right. This document is an official document by IRAS. All right. It's the e-tax guide. Especially, they made a special tax guide for digital tokens. So, when they have to do a separate document for such things, they are serious about it. They are very serious about it. All right. So, I may attach this document up on our Facebook page for download. So if you want a copy of this, all right, by IRAS, you can come to our website to download, or you can go straight to the IRAS website to download this e-tax guide. Up to you. But if you drop by our Facebook page, just give it a like, follow us, because there's going to be lots of useful content in the future, not just for cryptocurrencies, but for traditional finance as well, all right, and for other subject matters. Okay, because Rubik's Academy is not just about finance; it's going to cover a lot of other aspects and scopes as well. All right, so I'm just going to go through the important points. I feel that these are the important points to me. Okay, but as a person who wants to file his income tax, I strongly encourage you to look through the whole document. Again, I'm not the expert. I'm just sharing here, just highlighting some points that I think are important. Okay, so this e-tax guide, this paragraph, I personally find, what's the word for it? Quite interesting. This e-tax guide will be relevant to you if you transact in digital tokens. Such transactions include receiving digital tokens as payment for goods and services, receiving digital tokens as employment remuneration, using digital tokens as payment for goods and services, buying and selling of digital tokens, issuing digital tokens. Now, honestly, the fourth point will probably constitute the fourth point, buying and selling of digital tokens, will probably constitute the biggest part of the people who hold digital tokens in the first place. But if you notice, at this point, the one thing that is missing is mining. But I'm just gonna say right here, this document does cover mining. Okay, I don't know why they didn't put it here. I think whoever authored this may have left that out. I'm not sure. Okay, but this document will cover mining. So those miners out there, don't think you're off the hook. Okay, so let's go on to the next part. All right, so I'm actually quite impressed by IRAS. I think MAS has a pretty good panel of advisors. They actually managed to understand the landscape for tokens quite well. You can see that they're correctly classified into payment, utility, and security tokens. Okay. It's a correct classification. I mean, I don't want to get too techy about it. I mean, technically speaking, they are coins and then they are tokens, right? But that's from a tech perspective. To IRAS, obviously, they don't really care about a tech perspective. So, okay, I mean, except for that, the rest of it is fine. It's correct. Payment, utility, and security. Payment token are tokens that have no other function except has a store of value, like Bitcoin, like Stellar, or maybe like Ripple. These coins don't have other values, or maybe Raven coin, except has a store of value. Payment token. Utility token are coins like FILE coins. FILE as in FILE, not FOUL. Okay, FILE, FILE coin, store coin. Okay, so these are the tokens that have an additional function. They have a utility, they have an extrinsic function besides just serving as a store of value. Then there's security tokens. Security tokens, for example, is Lottery STO. All right, that means tokens that supposedly give you dividends. But don't worry, if you haven't started receiving dividends from your tokens, I don't think you're still liable for any taxation yet. Okay, like it says here, the taxability of the return derived from a security depends on the nature of the return. So if you're not earning anything yet, that means technically you're not taxable yet, right? So correct classification, but I'm not highlighting it because it's just FYI. And like I said, if this video is not a basic beginner course for blockchain, so if you are not into blockchain, you don't have any tokens, you may want to attend our course or look out for our future videos. Okay. Now, the next thing I want to go to is here. All right. So currently, IRAS does not prescribe any methodology to value payment tokens. All right. So that doesn't mean that you can value it according to what you want. So they have explicitly said that you value it using major token exchanges like Coinbase and Binance. Okay, so we all know lah. I mean, those in the space will know Coinbase and Binance. They are two of the biggest coin exchanges. So whatever rate you see there is very well an industry standard, is very well an industry average. So don't try and find loopholes. There's no loophole here to exploit. IRAS has specifically said your token value will be based on these exchanges. Okay. I mean, in that sense, again, I applaud IRAS because, well, at least they know what they don't know, right? At least they defer the matter to the experts in terms of valuing the tokens. Next, now, source of income. Okay. If the bulk of the business operations are performed in Singapore, then income derived from such activities will likely to be regarded as sourced in Singapore and hence taxable in Singapore. Now, what does that mean? It means that if you transact payment tokens, okay, in your house, at Choa Chu Kang or Jurong East or Toa Payoh, anywhere in Singapore, and you make gains from the transaction of tokens, trading of tokens, then that business operation, that activity is deemed to have occurred in Singapore, okay? And you might be taxed, all right? So, important source of income. Next, okay? Now, tax treatment of security tokens. Tax treatment of the gain or loss on disposal. When you say disposal, it means either you sell it away privately on an exchange or you transfer it away. They just use a general term called disposal, is what the tax regulators do. But to layman people like us, it means basically selling off the tokens, okay, or transferring it away for any kind of value. Now, will depend on whether the security token is a capital or revenue asset to the owner, and accordingly, whether the gain or loss is capital or revenue in nature. So later on, they will talk about this point, capital or revenue. So basically, it's considered capital if you are given tokens because of your participation in a business. For example, you are the CEO, so you are given tokens. That's considered capital gain. All right, capital is considered asset and a capital. But if you are given, let's say your monthly salary, instead of being given in SGD, is given in Bitcoin. Now that is considered revenue. That is considered personal revenue, and that's why you still be taxed. Okay, so for those of you who, I don't know, trying to pay your monthly salaries in Bitcoin, sorry, but according to this document right here, you are still taxable. All right. So another important point, current deduction rules relating to pre-commencement expenses will apply to any business expense that are incurred before the commencement of business. So what business are they talking about here? They're talking about the activity of an ICO. That's the business they're talking about. So if you have any pre-commencement expenses of the ICO, maybe you need to rent an office, maybe you need to get a marketing team, maybe you need to get a PR team, maybe you need to get a designer team, maybe you need to get a website team, I don't know. All right. I mean, I actually do know because, we do help people to run ICOs if they need. All right. But the thing is, the important thing here is you can count it as a business expense, even though it's an ICO. So that's important. All right. Because a business expense will help to sort of calibrate your overall personal income taxes, especially if you're a director of the company. All right. So founders tokens, okay? So like I say here, if the token is used to remunerate a founder for the services he has rendered, it is regarded as revenue. Okay, if the token is not given as remuneration, it is given as his contribution to the business, or it serves as his stakeholdings it serves as his stake, his shareholdings. That means an alternative for his shareholdings in the business. Then it is considered as asset. And like I said just now, if it's a capital asset, it won't be taxed. If it's a revenue, source of revenue, it's going to be taxed. All right. So this is record keeping. As you can see, it's very detailed. It's very detailed. Honestly, I don't know how many of you guys out there actually keep such a detailed record of all your cryptocurrencies. Okay. But if you are still doing it, that means you're still not keeping a record. This is the part where I say you should keep a record. And IRAS has very kindly given you the template to keep your records. They need all this information. All right, they don't say they didn't tell us, right? So at least they gave it to you, the template. All right. Okay, so we are down to the annex, which is actually where most of the most important information is found. Okay. Now, so let's say you are a cafe owner, you're selling coffee in terms of Bitcoin. Okay. Now, you can be taxed in two ways. Number one way, if your cup of coffee is denoted in SGD, has $100. Okay, that's an expensive cup of coffee, but it's just an example, right? So if let's say you denote the price of this cappuccino, this cup of cappuccino has $100 in your cafe menu, then the taxable income in this case will be taken reference with to $100. If you denote your coffee in Bitcoin price like 0.1, 0.01, okay, then the taxable income in this case is the value of 1 unit of payment token at the time that the income accrues to the business. Okay, so this value, they already say, take reference with to Coinbase and Binance. So here's a bit of suggestion to sort of save you the headache and the heartache of going back, trying to find which day did I sell my cup of coffee at, so that I can know what the price of Bitcoin was at that day, and hence I know how to report my tax. Okay, to save you that heartache and that headache, okay, you should probably just denote your cup of coffee in Sing dollars lah. Okay, of course, if you accept Bitcoin, you need to know the volatility of the asset. So if you suffer a loss because you hold on to it, then that is your pasta lah. In Singaporean terms, that is your business, right? So, but in terms of tax reporting, honestly, for both you and the regulators, it's better if you denote it in SGD straight up. All right. Next. Okay, so receiving payment token through mining. You see, they cover it here in the annex, right? Okay, actually they covered it in the main article as well, but doesn't matter. Mining. Okay, so for mining, it's very simple. If you mine and you get the coin, your disposable gains and losses of the token is not taxable, because mining, you're just mining, or according to the article, or according to my understanding of the article. All right. Now, on the other hand, gains and losses from a disposal of payment tokens by a miner assessed to be trading in nature will be taxable and deductible. Means that if you mine Bitcoin and you start selling it to get SGD or USD, that SGD, that USD is taxable. Okay, so yeah. All right. I mean, IRAS is smart lah, right? I mean, it's both smart but predictable, right? Obviously, has a taxation regulatory, you tax at the point of exchange. You always try and put your taxation gantry, like an ERP gantry. You put your taxation gantry at the point of exchange, whereby you go from crypto to fiat. So this is an example. So if you mine Bitcoin using your S9, S13, whatever S it is right now, okay, with the moment you sell that coin and get SGD, that SGD is taxable, according to this article, according to my understanding of this article. All right. Okay, so over here, all right. if you are a mining provider, like you are a miner host, I mean, nowadays, not many already, but let's say if you are helping people to mine, now, because you don't keep their Bitcoin, the Bitcoin is transferred to your wallet, you are not taxed for their Bitcoin. But if they give you service fees for the mining activity, that means you are still providing a business service. That income is, that hosting fee is taxable. That hosting fee is taxable. All right? So airdrops, we all love airdrops, right? Getting airdrops randomly at an event. Now, if you get it randomly at an event, okay, that means you don't receive your airdrops in exchange for any goods and services, then it's not taxable. But if you receive an airdrop has a form of remuneration, it is taxable. Meaning you worked for the airdrop lah. If you didn't work for it, you just sit down there, attend the seminar, and then they just decided to do a bonus giveaway, then yeah, it's like winning a windfall, right? So it's not. Now, receiving payment tokens through hard forks. So this is the part where I think you guys may want to clarify with the relevant authorities because it's a bit unclear. Okay. Now, if you hold on to Bitcoin and it forks from there, it is considered a windfall. That means you get free Bitcoin Cash or free Bitcoin Black, whatever it is. That fork is considered a windfall. You are not taxable. Okay. But the moment you, while trading or in the activity of trading, it forks, then it's considered taxable. That's what it says. You see, this is the part where I'm a bit confused. Okay, so I'm guessing what it means is that when you hold the token and it forks, okay, as long as you have not traded the forked tokens, you are not taxable. You are not liable for taxation on the forked tokens. But the moment you start selling the forked tokens away, yes, you are taxable. You're liable for taxation. Okay. So I'm gonna stop here because the video has gone on 70 minutes. It's very long. Again, I apologize for the flickering on and off. My bad. I mean, the camera's bad. But I'm recording this in the middle of a pandemic, so I do have limited resources. Don't worry, I'm gonna get a very good camera at the end of this. All right. So again, I'm gonna attach this document to our website. I want you to go there and download and like our page at the same time. But most importantly, you really need to understand all these things because this is not a kidding matter. No matter how bad a situation we are in, we need to pay our income tax. We need to file. That's just the way it is. Okay, so thank you very much. Once again, my name is Jefford. I am from Rubik's Academy. Thank you.